Hey everyone, welcome back. Ready for another deep dive into today's stock action.
Always.
Awesome. So, we got two pretty interesting companies on our list today. Singtel, the big Singaporean telco,
Yeah.
and then Nio, the Chinese EV maker.
Right.
Both saw some, dips in their stock prices today. But like we always say, got to look beyond just the numbers, right?
Absolutely. There's always a story behind those numbers.
Exactly. So let's start with Singtel. Shares closed down, what was it, 3.1% today?
Yep. Down to it's $3.13.
Right, $3.13. But, it's not all doom and gloom. There's some interesting stuff happening behind the scenes, right?
Yeah, there's definitely more to it than meets the eye. Singtel is actually going through some pretty significant restructuring.
Oh, really?
Yeah, they're expanding and rebranding their business development function. Plus, they just brought on a new group chief corporate officer, Mark Chong.
Interesting. So it's not just like, shuffling people around. It seems like they're maybe gearing up for something bigger.
Yeah, that's right. These moves usually signal that a company is actively looking for new growth opportunities.
Makes you think, what are these new business priorities they keep mentioning?
Yeah.
Are they looking beyond just, being a traditional telco?
It's possible. We've been seeing a lot of telcos branching out, right? Moving into things like cybersecurity, cloud computing. Some are even dipping their toes into digital entertainment.
Right, right. So maybe Singtel's thinking along those lines, trying to become like a one-stop shop for all things digital.
Could be. It'll be interesting to watch how their strategy evolves.
Definitely one to keep an eye on. Okay, so let's switch gears now and talk about Nio. They also had a dip today.
Yep. Down 2.3% to close at US $4.74.
Huh.
And this one seems to be directly related to their Q3 earnings report.
Ah, okay. And what's the report saying?
Well, not all sunshine and roses, unfortunately. Their net loss actually widened.
Yeah.
Yeah, it's up to 5.1 billion yuan compared to 4.6 billion yuan last year.
Okay, so not great.
No. And their revenue dipped a bit too. But here's where it gets a little strange. Their vehicle delivery volume actually went up.
Wait, really? But their stock is down.
Exactly. It seems counterintuitive.
It is. So
Yeah.
how do you sell more cars, but, the stock doesn't reflect that?
Well, their vehicle sales revenue actually went down, even though they delivered more cars.
Huh. So they're selling more cars, but making less money from them. How does that work?
They said something in the report about changes in product mix affecting the average selling price.
Product mix. So what, are they like, giving away free cars now or something?
Not quite. Think of it this way. Imagine you own a burger joint. You sell a lot of different types of burgers, right?
Sure.
You might sell more burgers overall, but if you're selling more of those, value menu burgers and fewer of the premium ones, your total revenue might still go down.
Ah, I see. So they're selling more of their cheaper models.
That's the idea.
But why would they do that? I mean, the EV market is super competitive right now. Isn't that kind of risky?
It is a gamble, but it could be their way of trying to capture a wider customer base.
Makes sense.
You've got companies like Tesla, right? They're all about those premium models.
Yeah.
But then you've got companies like BYD. They're going hard after the mass market with more affordable EVs. So maybe Nio is trying to find their own lane,
Right, right. Find that sweet spot.
Exactly.
Well, it's definitely a bold move. Going to be interesting to see how it plays out for them.
Agree.
So taking a step back, looking at both Singtel and Nio today, it seems like both of them are having to adapt to some pretty, challenging market conditions.
Absolutely. I think that's the key takeaway here. We get so focused on the daily stock movements, but it's crucial to understand what's driving those movements, right? The strategies, the market forces.
A bigger picture.
Exactly.
Well, this has been another fascinating deep dive. Thanks for breaking it all down for us.
My pleasure. Always happy to be here.
And to all of you listening, thanks for joining us. We'll catch you next time for another deep dive into the world of stocks.